In this video, I'm going to be breaking down my 2.8k on euro dollar. Let's go into it. So as you guys already know, the first thing when I'm doing when I'm analyzing the chart is a direction, is my bias where market is currently heading and where market is currently is, okay? So based on daily and H4 time frame, you can see that market is in a clear bullish trend, making a series of higher highs and high lows, okay? Which means I don't want to be selling this market, I want to be only buying this market, okay? If I check H4, it's basically the same thing, okay? So the first thing, as I said, is direction, and we know H4 daily is bullish, okay? The trade, it was taken right here, so at that time it was pretty bullish, okay? Now, the second thing, what I'm doing when I'm analyzing the chart is my key levels, point of interest, area of interest, okay? Key levels. Now, how I know some price is a key level? It's based on a reaction what I got from that level in the past, okay? It's either that or it's either previous market structure high, previous market structure low, previous market structure points. So if you can see on EU, you can see this price was a pretty good level, because as you can see, when price came to this level, it immediately shut down. Next time when price came to this level, had some type of indecision, went down, broke above, which makes this level as a previous market structure high, okay? Because as you can see, price was creating higher highs and higher lows, which means this is a previous market structure high, okay? So this thing, this price was a great key level for me, great point of interest for me, and I want to take a buy from this specific level, okay? So I will mark it out as white, and because as you already know, it's not key levels, they are not specific price, it is a zone, okay? So I will draw the zone like this, and that's my job on a daily time frame pretty much done. We can drop down on H4 time frame, okay? So key levels based on daily and H4 as well, and it's previous structure levels, okay? So previous structure level, and we were trending here. Now, I don't want to be buying this market only that price is bullish, okay? I know price is bullish, but I don't want to be buying the market here or here or here or random here. I want to wait, and I need to wait for lower time frame structure shift first, because until that, market can trade down and down and down and down and down, and then market can flip, okay? I also like to use fibs from A to B, from low to a high on H4, okay? This was the previous market structure highs, which right now acting as a level of interest for us, okay? Now I know price pullback on this fib 61.8%, which is a great level for me to pull back, okay? And now price pulled back 61.8%. Price is trading right now currently at our previous key level, which is previous market structure highs, and price is bullish on higher time frames, okay? I got these three confirmations. That's not mean I'm gonna be hopping into trade immediately. I need to see this internal trend, okay, to shift bullish, because as you guys know, when market is trending bullish, it is creating a push and pullback, push, pullback, push, pullback, okay? So this phase is a push, this phase is a push, this phase is a pullback, this phase is a pullback. And when price is pulling back, price is creating a counter trend, which means in this case price was creating a downtrend to the downside, was creating a lower highs and lower lows. And what I need to see is the downtrend to break to the opposite side, to go with this major trend, to go with this uptrend, and then I know market is ready to go higher, okay? So I need to wait for it first, because market can continue down forever until reaches that 100%, 100% of this fib. Okay, so yeah, that's basically what I was waiting for. Okay, if I know I have my all confirmations in sync, I have my fibs, I have my key levels, I know price is currently trading at this key level, I need to wait for that counter trend to switch bullish for me to be able to take advantage, for me to be able to take that A-class setup. Okay, so I zoomed out on H1 M30, and if I'm gonna H1 is more clean. If I'm gonna highlight the structure, market was trending down, creating series of lower highs and lower lows, which in this case, this was a lower low, this was a lower high, this was a lower low, this was a what? It was a higher high, which means market broke structure on this hourly time frame as well. As you can see, market was creating lower lows, lower highs, lower lows, lower highs, lower low. Market failed to continue with this downtrend structure, and market broke structure, okay, to the upside, resulting in a new higher high, which means right now I have daily H4, H1, M30, basically every time frame bullish. So for me, the probability of winning this trade is way higher. It's way higher for this trade to go up than to go down. Okay, so I'm willing to take the risk. Now, with my entry method, how I'm entering the markets. It's basically the same thing. Okay, I'm highlighting some key levels on this H1 and M30 time frame, which is some key level which price reacted from a past or previous market structure high, previous market structure low. And in this case, I used previous market structure high as my key levels, as you can see. Okay, price broke structure, previous market structure high. Cool. And that's exactly how I entered. Okay, I placed a buy limit on this market structure high. I placed my stop loss under this low, and my take profit was actually at this swing high. Okay, price never got there, but I'm gonna explain why I closed early and how basically I closed. So that was first trade. Okay, entry here, stop loss here, 2.7 R, beautiful trade, everything was explained, everything was in line. Cool, that was the first position. Now I was able to scale in multiple times in this position, and that's why I closed a little bit earlier. I'm gonna show you the screens where did I close, but basically I know at this point this is my internal low and this is my internal high. Okay, if I zoom in on M30 now, you can see the structure shift happened again. Okay, so this is my internal low, this is my internal high. So this is that push phase which I was explaining at the beginning. This is that pullback phase. Okay, and in this pullback phase, price was creating this downtrend again, and price broke structure again on this downtrend. Okay, it is looking something like this. We got this main trend, which is this push. We got this pullback phase, which is this when price is doing this counter trend. Now I need to wait for that counter trend to be broken again. Okay, so what I did, I waited for this counter trend to be broken for me to be able to get that scale in. Okay, so the first position was like this, and now with the scale ins, same thing I applied. Where do I want to scale in? At the previous structure level or at some key level. So I was having this marked out. I had the buy limit here, okay, because price broke it, retesting it, rejecting, and go higher. At this point, my stop loss went here for another 1 hour risk. Okay, now I wasn't over risking on this position. Okay, when I'm scaling in, I'm not over risking. Basically, this stop loss went from 65 pips, let's say 60 pips, to 30 pips. Okay, which means on this position I was allowed to risk another 0.5% or half R on this position as well. I was still having the same risk, but thanks to me cutting this stop loss basically in half and still being valid, I was able to scale in more, okay? So entry, stop loss and TP is the same, it's the swing high, okay? That was another scale in. First entry, scale in, cool. Now, what I was having marked out as well was this intraday key level being right here, okay? And that's where my next scale in comes into play, okay? I saw price breaking, retesting this key level and go in and break in above this previous support, previous key level on H1 where price was ranging exactly for 5 days. Price was ranging at this specific price, okay? Then I know I have every time frame in bullish, every time frame in sync. Based on this momentum, I'm willing to take another scale in because I think price is gonna continue, okay? So what I did, I waited for this candlestick to break above, which did. The other candlestick closed bearish, which is okay. The next candlestick came down, retested it and closed like a bullish pin bar on this previous area of interest, okay? So then what I was waiting for was for price to give me this little wick down, and when price blew and break above this H1 pin bar wick, that's when my next scale in came into play, okay? With this scale in, entry here, stop loss went under this wick and TP was the same. Okay, like this. Okay, now I wasn't over risking again because this stop loss from 23 pips went to 5 pips. This stop loss from 30 pips went to 10 pips. So from originally 60 pips, I cut this stop loss to 10 pips. From this originally 25 pips, I cut it to 5 pips. So I was able to risk another, let's say 0.7, 0.8 on this position, and I wasn't over risking. That's the beauty of this scaling, okay? I know if price is gonna go down and price is gonna break this low, price is most likely gonna go lower, and I don't want to be in this trade. So that's all my scale-ins, okay? I wasn't able to scale in here because I was waiting for price to retest this high, which never actually happened, which is okay. And now with my scale-ins, I close all the trades right here. Okay, maybe you're asking why. I closed the trades, I have two reasons, okay? First reason being, we were trading on this major key level, and if I looked, I saw price having multiple strong rejections and reactions from this level. So I was like, there is a high probability price can reverse from this level, okay? Which kind of, as you can see, it happened, okay? That was the first reason. The second reason being, I was already up around 6R on all these scale-ins, okay? Which means if I was super satisfied with the profit, it was around 3K, 2.8K. I was super satisfied with amount of profits I had on this position, so I was willing to close, okay? There's two reasons, at least for me, where it makes sense to close the trade. One being, if you are trading at some structure level, which there is some probability price can reverse, or if you are satisfied with the profits. For me, it was both. Price was trading at some key level, and I was super satisfied with the profits. I was up 6R, and I was like, cool. I'm calling it, I'm closing right here. I send it as a signal as well. I told everybody, hey, close the trade right here. There's a high probability we can flip from here. I was up 2.8K, I closed the trade. I'm gonna show you the screens, but the trade played out to the perfection, okay? The next day, I was aiming for break and retest of this, which happened to the perfection, but I was on a plane to Bali, which I was unable to get in, which is completely okay. This trade was absolutely beautiful, and I will show you the Discord So as you can see, it is 18th of July, buy limit on gold, which I mistakenly, it's EU, right? EU, my bad. Gonna be going over weekend. And yeah, this was another prediction for you. As you can see, this was the first trade, and I predicted exactly, okay, what I did. Now, what I did, buy EU, move stop loss here, okay, move stop loss from that 60 original to 30, then scale in. This should reduce the stop loss in half, so risk another half R. Exactly what I said, okay? Exactly what I said. And then you can see that this trade played out to perfection. Like, this happened basically to the T as well. But I wasn't able to, yeah, it's basically happened to the T, but I wasn't able to scale in, which is okay. And as you can see, this is my positions on EU. First position, scale in, and we fucking flying. So then I would say closed 75% of the position, closed fully, plus 6%. Close full, everyone, okay? I basically told everybody to close exactly at the point where I closed. I'm gonna show you guys the screens, but hey, as I said, I closed the trade here, which was 6R, and which was 2.8K. I was risking around like $500 on this position, so it was like 5.7, 5.8 risk reward. At one point I was up 3K, but I closed 2.8K, and that's basically it for the trade. So guys, to summarize it real quick, okay? First is the direction, H4 daily. Use H4 daily for direction. Am I trading up? Am I trading down? Am I creating lower highs and lower lows, or higher highs and higher lows? Next, use your key levels for you to potentially take a trade from, okay? Use previous structure highs, previous structure lows, or use key levels from the past, which price reacted strongly, okay, from the past. Then you can use Fips if you want. If you don't, you cannot, you don't have to. And then that's the important thing, okay? As I said, we got our push phase, we got our pullback phase, but the pullback phase is creating a counter trend. That counter trend needs to switch. After you got that counter trend switch, you got every time frame is in sync, you can be ready to position yourself and you can be ready to go up, okay? Guys, if you find this video helpful, you can let me know in the comments. If you guys want to join my premium group where I do send signals weekly, basically I would say 3-4 signals a week. I do send market breakdowns, I send market analysis. Also DM me on Instagram and we will figure something out, okay? As I said, I hope you find this video helpful, guys, and I will see you in the next video.